The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here on this Thursday. This is the 18th of November. We're looking at the Dow down 144 points. So normally I do Friday as Technical Friday. But there is just so much going on. I need to do Technical Friday on Thursday. So it's Technical Thursday. There are patterns that we look at. And these are patterns that I consider core to the techniques that I use. One is a straight line move, up or down. The other is a cup formation. It could be a V-shaped formation, but it's basically going from one point down and back to that point. And the other is going from one point up and over and coming back to that point in an arch formation. And you can get a combination of 1 and 2 or 1 and 3. This is 1 and 3. This is called the dreaded H because it's red. And if you take out the left side low, you can go quite a bit lower. And this is on the right side here is 1 and 2, where you go up sharp, where you pull back, make a cup or a V-shaped pattern, and then take out that high on the left side. How you take it out and how you hold that high is very, very important in my work. So that's under the umbrella of the Chapman wave methodology. Well, the Dow, you can see, has gone down, straight line down, made the arch formation, and over the years I've now been able to refine it to say that if there's a failure at the first or second peak and you come back and retest that left side low, that's where you can get the failure of the dreaded H to hold the left side low and it breaks to the downside. We've just seen that. Yesterday, the 35,030s or so low didn't take out the 35,915 low that was made on, this was November about the 11th, the 11th, and today we've gone below. The day is young. We're talking about a candle that's just had half an hour, 35 minutes of trading, but it's gone down. So that's the first part of this whole thing. Now what you can see for the first time is that the green 9-period exponential moving average is really close to breaking underneath the 14. And if that takes place, you've gone, I've already called this a sell mode in the daily chart of the Dow. That confirms it. And it says, be careful. You can get a 1-to-1 to the downside of the cup formation, the arch formation. And you could even get a 1-to-1 of the whole move from 36,565 to 35,900. This is about a 600 point. You can get that down. So this is all in the stages of rolling over. Nick, thank you for that information last night that you sent. Yeah, there is a chance with so many people saying that there should be, if there is a pullback, we should still close much higher. This has just become a consensus. I don't like a consensus. I'm saying I suspect that the high that was made at 36,565 in the Dow is something to be respected. And that means we could pull back. And even if there's a rally, my theory always is that especially the Dow, but if the major market indices close October, going to the first week of November, very close to the yearly high, in this case it was an all-time high, there's a real good chance it closes closer to to that high when December the 31st kicks in. That can be modified. I don't really care at this particular point. I do care that we're in a sell mode in the Dow. Now we're going to have to watch the weekly chart. Now let's go through the others. The S&P was a better formation at this particular point because it's the 500 stocks that have been holding well. They don't have the Home Depots and the Ciscos that have been really hurting the Dow, which is now down 210. Now the S&P's just gone negative, -5. And look what happened. We've made a peak D at 4718.50, and there is really a good chance, I'm just going to draw this in to say there's a good chance, we don't know if it's going to be, that this becomes a rollover at a peak A, gray peak A, because it's under the previous high. The 9-period moving average is still way above the 14. That's a good sign. The MACD is negative, stochastic's negative. No, stochastic's at 81%. pull back sharply, not yet negative. On balance volumes pull back. So still internal strength in the daily chart of the S&P. Weekly charts having a high-level consolidation. Leg B in the monthly, peak D in the 120-minute chart. I forgot to tell you what the technical Friday and technical Thursday, what the Dow is. That was a peak C minus as it pulled back. It actually was close to peak C1, C2, and now sharply lower. Let's go on to the QQQ. Pull back now. It's only up 99 cents at 398.57. My target has been 401.00. It got to 400.31. So far, it's missing out. The technicals are very strong. Doji candle went above yesterday's Doji candle. This is so important. The 9 still very strong above the 14-period moving average in the daily. The MACD is still positive. Whoops, it's just turned minus 0.01. The histogram and the vertical lines, the 0% line, it's just gone down to minus 0.01. It's actually fluctuating right now. Being flat usually takes the last signal. We haven't got a signal yet. Stochastics at 78%, a little bit weaker than it should be. And the on-balance volume was overbought. It's now a little bit overbought. Wow, we've got to watch this. And what happened, I discussed this yesterday. We went to the parallel extension of the up channel. We hit it exactly on the week of the 5th of November at 400.99, pulled back under it, went back above it, and now it's inside, in an inside track, repellent zone. I've got this as leg G/C in the monthly chart, and we've just started leg D in the 120-minute chart. What I'm doing here is I'm trying to show you that the reason why I've become so cautious, and the reason why the shorting side is for subscribers to my opening call is on our list, is because there is a chance that this isn't just a minor pullback in one indice. If they start to roll over in sequence, that's going to say, take care of your portfolio. Just have some respect and have a way of at least taking some profits here, maybe buying some insurance, just doing something that says, spectacular run to now, just got to be somewhat careful. IWM, the Russell 2000. Russell 2000 down sharply, down almost 1%, down 2.36 at 233.52. At a peak F top, I have to now put in a down arrow and as always cadovers on the daily at this particular point until we get a signal that says, whoops, reversing back to the upside. But the weekly chart, I'm going to take time now, Technical Friday. I spent a whole bunch of time talking about this. I said, my theory, and this is what I've been practicing for so long in the E-minis. That's why I do the 1 minute, 2 minute, 5 minute, 10 minute charts throughout the day, whenever I'm trader or I'm practicing these patterns. And what do I look at? I look at to see what happens in an upper rectangle formation, a narrow rectangle formation going sideways. And the theory I have is always, if it goes over, it goes to a D, it often comes back to retest the middle. And that's what we're doing right now in the weekly. I'll be back. That's down 240.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman here. This is the Target Technicians Hour. I'm just finishing the chart of Regeneron. Had a question about it. Is this a good time to be buying? So Regeneron. Now, one of the things that the people in the den might have noticed is that in the monthly chart, I used to have all these notated. I don't want to go through the reason why. Occasionally I'll lose a lot of charts from historical charts. I have to go back and redo them. It takes just a couple of minutes to do. So what I like to do is, when it's questionable, I like to go all the way back to the start of the low of whatever it is, say in the monthly chart, because you want to identify the lowest low bar and then merely count each successively higher peak after that. So I went to Regeneron. I'll be back to all the things I've been talking about. I just went back to Regeneron with the low that was made back in October of 2011 at $2.90. It's actually 1,000. Is that 1,000? Yep, 1,000% higher than that right now. And it went peak A, pulls back, still an A, then it goes A, B, C, D, has a Chapman wave instant restart. That was back in May of 2013. Then it goes peak A, peak B. Oh, no, don't tell me I just did the whole thing over. I have to do this. I saw this happen as I was doing it. Yeah, A, B, C. This is a D. And it also did within 3 bars. The Chapman wave instant restart, didn't have to take that because this turned into a peak F, serious top. Right there, it was an E, there it is, and there's your F, right there, double top in the area of late 2015, pulls back very sharply from the 42 area down to the 20s, starts peak A, B, C, D, pulls back, right there, little double top, starts again. Regeneron monthly starts a new high back in February of 2018. ABCD, instant restart, ABCD, pulls back sharply, but then it goes to the last high of peak E, all-time high of unbelievable, all-time high of 327.37. Is that correct, Carly? 300, yeah, it is 327.32, and then it pulls back. So Regeneron monthly chart hasn't given any signals negative. It's still positive, but it is toppy as a monthly chart. Peak D in the weekly chart pulls back very sharply from the 321 area down to the 255, 56, bounces up to 301, pulls back, and now it's trading at 274 in Regeneron. This is in the pharmaceutical business, biotech, I believe. So the question is, what is the exact? Is Regen okay to buy at these levels? Now, there's a difference between starting a position, buying a position, thinking, okay, this is a longer term. I want to get in and I want to hold this for a long time because it's just, it goes sideways, but eventually it's a stair-step move because it pushes to a new level. This is a little different because the move lately has been so choppy that it's saying it's kind of struggling to find its footing. Yes, it's filled the gap, and I like that. It had a gap, an island reversal from the most recent low of October the 10th or 12th at 248.55. But then it came back and filled it, and now it's moving up a little bit. I'm going to suggest this because you obviously follow this enough to say I'm interested in buying it. What I'm going to suggest to you is two things. One is pulling back now. It's 274.11. It had a nice early pop to the 282 level. Now it's 8 points lower. If you said to me, buy, sell, or hold, just straight off like that. No, buy, sell, hold, or do nothing. Just at this particular moment, I'd say do nothing. There are a couple of reasons for it. You might have to pay up if you're going to get in, if you do nothing right now. But I think I would prefer that to paying 274.11 at this particular stage. If it's making an arch formation and the 9 hasn't crossed positive in the 14, so there's still some weakness. The MACD is so close to turning positive that's a good sign. Stochastic has rallied to 31%. On balance volume is rallying. It's not great, but it's rallying. So what I would do for people, this is something they've studied, this is something they would like to get in. I say, in your case, my case says, hold off. Let's give it 2 days. Let's give it even until maybe Monday. I don't mind paying up a little bit. I don't want to be buying lower lows. I want to rather be buying higher highs. So I'm going to say hold off. But in your case, at 270, see, even now it's not holding very well. Let's go to the 120-minute chart. Nice pop, A, B. It's only a C, but that doesn't mean to say it has to go to a D. So I'm only going to say to you, start like a nibble position, and the nibble position is just to get your foot in the door so that it gives you a sense of what you're going to do maybe in a 3 to 5 sessions time. So I would step aside. I'd hold off. I'd like to see if the 273, 272 level holds, because if it closes on 272, that's really not good action. So at 274, it's jumping around very quickly between 274s and 273s. You could just nibble here. Does that nibble have a stop? I would even have a stop on the nibble. I'd give it you got to give it something, a 1%, $2.50 stop, and just see if you can hold it for a couple of days. You might get taken out. If you get taken out, you don't want to come back in until it's proven different things. So yes, Regeneron, RGEN Corporation, I'm saying to you, if it's something you've been wanting to get into, you don't really want to miss anything, because if it suddenly turns up and is trading at 285, what do? Just start just like a tad, like a very small position. Whatever you were going to buy, it has to be like an eighth or a tenth of it. You're just getting your foot in the door, that's all. And if it holds very well, that's great. So here we are. And on that one, I'd have about a 1% at this particular point. If you want 2%, that's fine. I'm just saying it's a nibble position to give you a feel. Why? Because if Regeneron, by the end of the day, because it did open very strongly, if by the end of the day it's able to get to 275.60 to 276.60, it says, you know what? I'm ignoring what the general market's doing. The Dow's down 230, the S&P's now down 10 points. I'm almost independent, and that's really what you want to see. And then you can even start, we'll talk about it again if you want, whether you add to it or not. But in the meantime, I'm just saying I don't think I would do anything more than a nibble. I personally would actually step aside for a little bit. I'd sacrifice a point or two on the upside rather to see that it can go to the upside than to be a sacrificial lamb if it suddenly closes under 272. Hope that helps you. All right, a lot of things that we've got to discuss now. I want to do this very quickly. Let's go back to our charts. There are. Okay. So within the context of what we're looking at, remember, I like clues, and the clue for me is that if the QQQ, the QQQ index 100, 1, 2, 3, QQQ spirals into the 403 area in the next few days, it says, you know what, we've now got the same kind of rotation that we saw in other areas that took the lead and then started to fail, and they took the lead again. We saw that in the IWM. We've seen that in other areas. That's happening in the QQQ. But if it starts to fail from here, I say be a little careful. The Dow's leading the downside, or the IWM is.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so we're back. Basil Chapman, Tiger Traditions Hour, and we're in this phase that I'm calling right now. This is a really important phase. We're looking at possible double tops in the QQQ. I'm going to show you that in a minute. But at the same time, I want to just tell you that someone said it's Thursday, not Friday. No, I'm doing Technical Friday on Thursday. Why? Because there are so many things in my work that we need to be looking at now, because I think that we are making some kind of a top. I can't tell you yet because it's rotational. I can't tell you yet how serious it'll be. But in some areas, you're starting to see deterioration on the technicals in the day that is a lot quicker than one would have expected. And I've been warning about this, so let's just go through. So the Dow is in a sell mode on the daily. The S&P, not even quite a sell signal just yet. The QQQ, I'm expecting there's enough residual strength that I've got to just give it a little time. I was anticipating 400.99 was the high of the 5th of November, and it pulled back quite sharply to the 14-period moving average. It did a couple of things that I've been talking about for a little while. I'm going to go through them in a moment, but I thought there's a chance that we could go just to a fractional D. Because the others are starting to pull back, it didn't necessarily have to go higher than 400 and 150, 400 and 230, and then turn down in the next 2 days. It has turned down intraday, but it's still up. The QQQ up 91 cents at 398.54. Let me just do this here. Here's the, it's in leg D okay, a couple of things. Technical Friday, but we're doing it on a Thursday. The peak G that was made on the 5th at 11:30 in a 120-minute chart with a doji candle and then a pullback, and it dropped all the way from that 400.99 level to 387.53, had what I call the chance of a rectangle formation that could go to like a lopsided V, but more like a cup that is more like a gravy. I call this the gravy cup because why? You come down sharply and then you got the spout going a long way sideways. And then it should go to a good chance of, if it makes higher highs and higher lows, to just about on, just under, or just over the previous high, and then come back, and it should do that at a peak D or maybe an E. Well, it did that in leg D. We haven't got a peak D yet. I have to wait until this bar concludes. It's a 120-minute bar, so that's number one. And the technicals are actually okay. They're not great at all. So this is price moved by something within the index itself. And of course, we can have just one quick look now at something called NVIDIA. You might have heard of it. There's a little baby chip company that came out with fantastic earnings and spiraled from the high that was made on the 9th of 323, pulls back to the 289 area. Today it spirals to 327.60. I'm looking for round numbers. Haven't seen any. The day is young. We'll see what happens. And here is the same pattern that we were looking at in the Qs right there, and it did pop to a higher high. All right? So patterns repeat over and over again. This is the rectangle pattern, a little mini one that broke to the upside, and at some point should fill the gap. When, we don't know, but at some point. So that's helping the QQQ. The day is young. I still see a chance that there's going to be a little burst of energy here. I don't know if it's enough, but maybe a little burst of energy a little later in the day. This is not, the market is telling you it is so selective at this particular point. Yep, the VIX has jumped. It's at 17.76. It goes to the 18.60s, 18.90, 19.20 area and holds there. This market, the whole market comes tumbling down. At this point, you've got a rotation. Technical Friday on Thursday. What are the patterns we're looking at in the Chapman wave methodology? There's a pattern that I call the falling axe formation. What is the falling axe formation? Very simple. I like to nickname these. That's the reason why you don't find this in Stocks and Commodities magazine, because nobody's going to have a technique that's called the falling axe or the dreaded H or the drop bucket formation. I've been getting Stocks and Commodities magazine for 20, 30 years. I had an article once that I was just about to send them, and I thought, why on earth would I do that? This is stuff that I've developed by myself. I talk about it enough. I don't have to, advertise the whole thing. But in the meantime, back at the ranch, what is the falling axe? It is really simple. You've got a long move to the upside. It makes a top. It pulls back. It makes lower highs and much lower lows. It looks like a cone formation, an expanding. Now, should I call it an expanding cone with lower highs and lower lows? I mean, too many words, right? So falling axe is perfect. There's your handle. Here's the blade of the axe, which expands, and it's declining because it's tilting down. All of a sudden, it finds some support and it breaks the trend line over there, and it can go to the next thing. First of all, it can break and then go to the pattern that I call the one-to-one expansion, Chapman wave formation, where you want to see in the same number of bars or the same degree of angle a test that goes towards the left side high. That creates this bucket, this cup formation. Well, years ago in my CD introducing the Chapman wave methodology, CD book, I have the pattern and I called it the drop bucket. Why? It looks like a backhoe. Here's that long arm, here's the bucket, and what happens if it fails with this double top? It opens up and kashlop, all the rocks and dust and stones and everything come tumbling out. That's what happens. Why? Because it's the same pattern upside down as what? As, let's go to the Dow, INDU, the dreaded H. Look, it's the same pattern upside down. Instead of the reverse Y, we've got an H, and it broke to the downside. So these are patterns that repeat over and over and over and over again. All right, let's get back to our story on the QQQ Index 100 trading vehicle. I see enough strength, especially with the 9-period moving average above the 14, to say there should be a test of the previous high. How high it goes above that is going to be another technique we look at. Doesn't just pop there and the general market weakness says, you know what, the SMHs now, I have to broaden this out. I have to say SMH, because this is, NVIDIA is absolutely part of it. Spikes to, I'm calling this for now, still a leg F. I could give it an alternate count. I don't need to. Let's just go one step at a time. Gap up to a leg F with an all-time high of 311.64 today. It's trading at 308.18, 3 points lower. This is went to a peak D, E, and then here I can use the alternate count. And let's just say F/B. And it just says, be ready, because the technicals are really not confirming it. They are in the daily, but not in the 120-minute chart. Sustainability is important between now, the moment we're talking about right now. If there's a deeper filling in of the gap, in other words, we opened at 307.37. We opened at 309.82. The low is 307.37. If we start trading at 305, if we close underneath the left side high that was made back in November the 9th, under 305.95, I'd say just be really careful, because this is what often creates some kind of a top information. I'm only talking daily. I'll be back in a moment. Basil Chapman, Dow's down 196.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. So let's just keep going like this. So what we've got is the SMHs, 308.29, the semiconductor market vectors ETF, and a pop-up to a possible peak, a leg F in the 120-minute chart. And remember, I've always said that bottoms are made in unison. That is, you can go back all the way, 1987, October the 19th and 20th, that was it. Just keep going back. March the 6th, where we went long on the Dow back in 2009. Then that was Friday. On Monday the 9th, the S&P made its low, all within a couple, 2 sessions or so. In March 23rd of this past year, when we went in 2020, we went long the day of the low. But tops very often are spread out. So in that context, I'm not saying this is either a major top or any kind of top, because we don't know yet whether the Qs are topping out. We know that the Dow has, in fact, done everything that I was talking about from the day within minutes of that pop to the upside Monday a week ago, where we started a short position. We've taken that off at this point, but we started a short position on the Dow for the first time in ages, and that was at about 36,520-ish, and 36,565 was the all-time high that day. And then there was a doji candle and a pullback. So this says on the daily chart that there's a chance that we're arching over in a bigger, the dreaded H, lowercase h pattern that I just showed you is right here. Let's just do that again. I was asked a question about it, so why not go to it right now? I'm treating this as Technical Friday rather than tomorrow. Well, tomorrow as well. But this is the pattern. This is the pattern right here, the lowercase h that takes out the left side low. I call it a red dreaded H because if it takes out the low, it can get quite a bit deeper. That's just the Dow. And the S&P, as I said, we've only got a hint that there's some kind of a potential failure pattern occurring, but it hasn't done it yet. Look, it hasn't even closed under the 9-period moving average, let alone the 14. But you've got the rectangle formation. Let me just draw the patterns in because they repeat over and over. Remember, the long sideways rectangle formation can last a lot longer than your patience. Eventually, if it's at highs, the whole rectangle, there's usually a pop to the upside, and then it comes back into the rectangle to try to test strength. And we'll see all the different, IWM did that. A number of charts have done that. We'll go through that. But this has the potential within the rectangle formation to make the H pattern. 47.18 was the high about 9 days ago, and then a retest at 47.11. And here we are. Let me just double check. Was that 47.14? So just 4 points from the all-time high, and now it's gone sideways. I'm not talking weekly charts. Tomorrow's Friday. We'll deal with weekly charts, but I'm talking about daily charts. And here's the QQQ. Where is it? It went to within 400.31. It needed, 9 takes you to 40, 50. It needed what? 59 cents, something like that. 59 cents, 69 cents to get to 401.00. It missed it by pennies. The day's young. Let's see if that happens. Or if it starts to fare from here, now I can finally call this a peak C1 with potential peak C2 in the Chapman wave. Acts like a D, and then says be very careful. But the 9-period moving average is so above the 9, and the 9 is so above the 14. I don't want to get in front of anything. For subscribers, we have a plan, and we'll stick to our plan. Look at the IWM, the Russell 2000. Failed from the high that was made at 244.46. Now I may as well put in on the 8th of November, right there, 11/8/21. And I can make that red because it's in a sell mode. It was already in a sell mode a couple of days ago. And now it's confirmed in the daily. And the weekly did exactly what we were talking about. Rectangle formations become magnets, both up and down. So it's gone above in leg D, Chapman wave, fourth highest peak. Peak D is where you got to start being careful. And lo and behold, we've pulled back, and now we're underneath the 234.53 high that was made way back in March of this year in the weekly chart of the Russell 2000 IWM. And the low so far today is 233.05. We went underneath it. That's exactly what we talk about in rectangle formations based on my work. All right, enough with that. Now let's get to some other little nitty-gritties that I want to talk about. I haven't finished doing the my market overview. So here we go. So we've got the SMHs I've discussed. The XLK should be influenced a little bit. There it is, all-time high after the little doji candle yesterday. So far, I'm calling this a leg F. We'll see if it turns down. So far, it's pulled back from the high of 169.71, all-time high, daily, weekly, monthly. So this is really important. And the 120-minute chart is gone. I'll do this quickly. Peak A, B, C, D, E. It's in leg E. Does it fail? Yeah, we don't know. We'll see what happens. The MACD is still good. Stochastic is very good at 91%. On-balance volume is pulling back, but still very strong. Way above the 9. 9's way above the 14. It's going to take a lot of work. Bad news is the only way that it really tank right now. That's the S&P Select Tech Spider Fund. Right? Okay, now we're going to go to gold. Gold is near the highs. I'm going to draw this in as one of the patterns that we look at here. Potential for what? An oval pattern, breakout to the upside, or a failure pattern. There are ways of looking at this. I've given an alternate count. The MACD is strong. The stochastic is strong at 87%, but pulling back, but still strong. On balance volume, relative strength right there is good. 9-period moving average has supported 1850 and 14 at 1839. It's way above that at this point at 1861. If there is a close in gold, this is a continuous contract between 851. I'm going to say 843. Yes, below 843 between now and Tuesday of next week. Gold has made some kind of a shorter-term top, and the pattern that we always look at, which is the cup formation, right there, beautiful cup formation, broke above it, went above all the moving averages. It's having a high-level consolidation right now in the daily. The weekly had this pattern. Remember the falling axe that I was talking about just now? Lower lows and lower highs that eventually makes a kind of a cup formation reversal. Well, this is the exact opposite. Look, we had this on the downside, and I said, be careful. But in this pattern, if the price movement goes to either a peak C or a D, what happens very often is that it comes back. It doesn't break deeply below the left side low, in this case, the low of the 12th of March of 1682. Instead, it then has enough power to probably try to go back to the blue line. If it crosses and holds above that blue line, that is very good action. So the gold on the weekly chart has gone above this blue line. And so far, it's saying that blue line is like a magnet line, and higher highs and higher lows, at least for this moment. Think of it also within a rectangle formation between let's call it 1912 and 16, I just call it 1700. All right, for the moment. Now, a couple of things I want to look at in the monthly chart. Oh, no, that's too quick. All right, let me just say, silver quickly. Silver's pulling back. a little bit after the PKF. The dollar, you remember, we pay a lot of gold to get the GDX along the dollar from 2018 in April, and it's at 95.70. See, acting very, very well. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So Spider-Man in the YouTube, the Tiger Financial News Network YouTube forum over there said QQQ has negative divergence at the double top. Now, I want to mention this. I was going to do that, but I found that it's just kind of a heads up. This vertical line right here, the high of, November 5th or 6th, where the QQQ's made its high, all-time high of 400.99. Look at this right here. The MACD is much weaker. The stochastic is very much weaker, under 80%. On balance, volume is still good. But I have to tell you, over the years, I found that if I keep relying on the 9 above the 14, that is just an incredible indicator and speaks to internal strength. So I've seen what happens sometimes. It does pull back, but only mildly. And as long as that 9 stays above the 14, there could be enough strength to move the QQQs higher. That's why I say I've got this panoply of Chapman Wave umbrella, Chapman Wave techniques. And at this particular point, there's a plan that we have for subscribers. And all I can say is that we will go with the plan. If it works out, and then we'll have to deal with whatever the consequences are. And that's the only way I can do it. But yes, there is a negative divergence right now. But the most important indicator for me is that 9 holding so well above the 14. Let's just do this quickly because we're going to run out of time. So I said silver was down a little bit. Dollar was pulling back, but it's at a peak C potential with another little pop to the upside possible. Let's go crude oil. Crude oil right now is down. It's up 10 cents, but it made a lower low. It's in a sell mode since I said where we actually went short for subscribers, just about a point off the all-time high. No, recovery high of 85.41. And then we took profits. We should have gone back in. We never did. And now it's gone to lower lows. I think digestive phase. TLT. I never even got to the TLT. I never even spoke about what's coming up today. PANW, Applied Materials. Oh, well, the day is young. We'll have to just see what happens with Applied Materials at the end of the day with whatever they say. I'm watching the estimators real close. Have a wonderful day. Stay tuned for Larry Pesavento. There should be a great show. You had a terrific workshop yesterday. And then, of course, you've got programming all day.